Welcome back. Last time, we talked about what money is and why it exists. Today, we're diving into markets, the engine that makes money actually do something. Stick around. Every time you buy snacks, a hoodie, or that one energy drink you swear is for studying, you're stepping into a market. You're not just shopping, you're part of this huge system where millions of people are buying and selling stuff all the time. Right now, somewhere in the world, someone is selling something and someone else is buying it. That's the market at work, 24/7. And honestly, you're already an expert at it, you just don't know it yet. A market is basically a place where your money and other people's stuff meet. You want things, they want money, boom, that's a trade. And that's the core of how the economy moves. It doesn't have to be a physical building with a name tag. A market is any situation where a buyer and a seller agree to exchange something valuable. Could be a store, could be online, could be your friend selling you their old gaming console for cash. The point is, there's a need, there's a supply, and somewhere in the middle, a deal happens. In every market, there are buyers and sellers. You're the one trying not to go broke, they're the ones trying not to go out of business. When you agree on a price, the product moves one way and the money moves the other way, like a tiny two-way street. Neither side wants to feel like they got scammed. The buyer wants good value, the seller wants to make a profit. When both sides feel like they won, that's when the magic happens. It's not about someone winning and someone losing, it's about both of you getting something you wanted more than what you had before. The price is just the number you both agree on, so this trade actually happens. If the hoodie is 40 euros, you're secretly asking yourself, is this warm enough to justify my cold, empty bank account? The price isn't random, it's a signal. It tells you how much the seller thinks it's worth, and it tells the seller how much people are willing to pay. If the price is too high, fewer people buy it. If it's too low, the seller loses money and goes out of business. The price is basically the handshake that says, yeah, we both think this is a fair deal. When lots of people want the same thing, that's called high demand. If 10 of you want the same sneakers, the price usually goes up because the seller is thinking, well, you'll probably still buy. Limited edition drops, new gaming consoles on release day, concert tickets for your favorite artist, these things have insane demand. And what happens? Prices spike. People camp out online, scalpers show up, and suddenly that 200 euros ticket is going for 800 euros. The seller doesn't have to lower the price, they can barely keep up with how fast it's selling. That's demand at work. Supply is just how much of something exists to be sold. If there are only 3 consoles in the whole store, prices can climb faster than your heart rate on exam day. If there are hundreds, prices usually chill down. Think about it. If a store has 10 hoodies left in your size and color, they're not desperate to sell them. But if there's only 1 left and 3 people want it, that hoodie is about to become very expensive. Supply creates scarcity, and scarcity creates urgency. The less there is, the more valuable it becomes, as long as people actually want it. You don't need to be a math genius to get this. More demand usually pushes the price up. When everyone suddenly wants the same thing, sellers don't need big discounts. They know someone will pay. In fact, they'll often raise the price because they can. It's not greedy, it's math. If demand is high and supply is limited, the price goes up. This is why concert tickets get expensive, why gaming GPUs cost a fortune during crypto booms, and why your parents are always complaining that everything is getting more expensive. More people want more things, but there's only so much stuff to go around. More supply usually drags the price down, like your mood when your favorite snack goes now in family size only. When stores are full of the same product, they often lower the price so it actually leaves the shelf instead of just collecting dust. If a store has 500 hoodies and only sells 10 a week, they're losing money storing them, so they drop the price to 25 euros and suddenly they're selling 100 a week. The math works out better. This is why stores have sales, why old model phones get cheaper, and why you can find crazy deals if you're patient enough to wait for things to go on clearance. Think about when a new phone comes out and suddenly the older model gets way cheaper. Demand for the old one falls, supply is still sitting there, and the store basically says, please, just take it already, so the price drops. Maybe the old phone was 800 euros last month, now it's 400 euros. Did the phone change? No, but the world changed. Everyone wants the new one now, so demand for the old one evaporated. The store still has inventory gathering dust. They have two choices: keep losing money or drop the price and move the inventory. They almost always drop the price. This happens with fashion, tech, cars, basically everything. Markets don't have to be physical places. Your phone is basically a pocket-sized shopping mall. When you compare prices online and in local stores, you're making different markets compete for your money like it's the season finale of a reality show. You can buy a hoodie in a store for 50 euros or online for 35 euros. That competition is beautiful. It keeps prices honest. If local shops get too expensive, you'll just order online. If shipping takes too long, you'll buy in store. The market balances itself out. And that balance? It exists because you have choices, and sellers know it. So a market is just a system where buyers and sellers meet, agree on a price, and swap money for stuff. Prices move because demand and supply keep changing, and every time you buy something, you're voting with your money. You're literally telling the world, I think this is worth it. When millions of people make that choice, entire industries shift. If nobody buys plastic bags anymore, stores will stop offering them. If everyone suddenly wants sustainable fashion, brands will adapt. You have more power than you think. Every purchase is a vote for what you want to see more of in the world. In the next episode, you're not just the buyer anymore, you're the one earning the money in the first place. We'll talk about how you sell your time and skills as work, and why your paycheck looks the way it does. Because here's the thing, you're not just a consumer in the market, you're also a supplier. Your labor, your skills, your time, those are products too. And they have their own demand, supply, and price. Buckle up, because next time we're flipping the script and looking at the market from the seller's side. Thanks for watching. We are going to continue this deep dive into the mechanics of money and the global financial system in the upcoming episodes. I aim to release the next part as soon as possible to keep the series moving. If you want to understand how the economy truly functions, make sure to subscribe and turn on notifications. Thanks again, and see you in the next one.